Good day, everybody. Brian here from quantlabsnet.com. We're going to talk about gold, specifically micro gold in the futures and options market. This is the analysis I've done, showcasing specifically that this is an affordable way to trade, probably the safest way to trade, and probably the most lucrative moving forward as there's more uncertainty in the fiat world of currency and the equity markets and the like. And gold is a uh, basically sound money. So here's a strategy. It's a MGC short put vertical spread. I've talked about my course. This is why you got to learn it. This is going to be also using what I've been working on for the last, I don't know, week or so on the ultra low latency in C++. And this goes to show why this is the safest way now to trade, probably the most lucrative as we go more into a, a unclear market, unpredictable market. So what the AI noticed that I use is we're selling premium to profit from the time decay and stable or rising price in micro gold futures. You knew this with full contracts as well. It's more expensive, but if you're like me, just working schmuck, I guess, obviously the micro is the better space to be in. It's deployed when quantitative models identify a significant overpricing of downside risk. So here's the strategy. We have order book imbalance and micro price, volatility surface analysis. We have high frequency data that comes in. We have different types of unique data to look at involving US yields, DXY, VIX, and so on. Okay. Um, so essentially what we're looking at with the Streamlit app that I've developed, again, courtesy AI, with Claude, which I'm going to be probably paring back. It does get expensive now. But I might have used DeepSeek for this one, which is much, much cheaper, 1/10 actually. Anyways, what we have here is the AI added in these other instruments, TLT, GLD, SPY, and the overall portfolio here in green. The portfolio is doing okay, but a lot of that's driven up um, by gold. Now, and this is going back all the way last year. So if there is an expected some kind of crash or something, um, what's our next best? And it looks like we have a portfolio here, but let's just go through this. So as part of my prompting, what I wanted to show is that we have all these different instruments that we can add. So if I take out TLT, um, just remove it, and the SPY as well, just to show you what's going on. We can see what's going on here. So with the back testing, um, you can see here the portfolio started to spike up, MGC and gold. So because of the timing of this portfolio and the specific mechanics of it on buying, selling options and futures of gold, MGC, namely, you can see it's going to start to spike and it's going to start to outperform MGC itself because of the way it works. No different than with the T note that I have worked on. That reason that will start to outperform probably a lot of the treasuries because of the way it works and it's buying and selling and doing all these synthetic options. This is what basically high frequency trading shops are doing. The problem is when you're at retail, you pay the commissions, which are excessively high and the like. But I can show you that from a historical standpoint, backtesting standpoint, yeah, the this particular combined strategy does fairly well, and it's a very low risk as well because of the low drawdowns. In fact, here's the risk analysis. So here we have our fairly low volatility at 18%. That's, I believe, going all the way back. With the portfolio itself, the way it's designed with the strategies as if it ran since last year, your volatility would have been a lot lower at 8.7. So these are the sort of things that you want to have as part of your portfolio now. And I'm evolving to explain that this portfolio is not just buy and hold, and it's doing a variety of things within the gold options market or options market and the futures market of MGC. It's a combination of things that it's doing under certain triggers and orders and probably at a high level. So from what I've seen with the T note, the 2 year T note, the confidence of profitability was 85%. But now you're starting to see it where uh, the risk is very low. Okay, so here we have a portfolio even uh, further at 4.1%, which is like very, very low. Okay, obviously that's because it's gold, but yet you have that upside as well, which is kind of really low risk. Um, so here, let me just pull up the other instruments here so you can see what was happening. So let's say I add in, uh, so we have here different options, iron condor, direction long. So let's say I just do a direction long on the QQQ. Okay. Let's say if I add in the TLT, um, I don't know, let's do the direction long again as well. Um, you can see what's going to happen here on the risk analysis is that TLT is going to have a higher max drawdown. We also have QQQ is not too bad. And the performance should be okay. Let's check out the back testing of that as well. Um, so it looks like MGC is still on top there, where the QQQ seems to struggle. Let me just blow this up. Okay, so you can see here MGC is doing fairly well. Or sorry, that's the portfolio in green. So it's still on top there. QQQ's been fairly flat or bouncing around, probably net loss, steadily declining. TLT's been flat, obviously, which has not a lot of profit opportunity. So this is what I like about these little uh, Streamlit apps that can be generated. You can compare other major instruments as well. So, for instance, everyone's going to ask about Bitcoin. My next big system, I guess you could call it, I'll be looking at is going to be. Um, so let's say we have Bitcoin set as a directional long. Okay, so there it is. Okay, now I'm not going to do the allocation. We don't need to worry about that. But oh, we got a weird error here. Okay, no problem. I'll get rid of that. It's probably because of this. Remove. Let's see if that sort of thing's working yet. So I can't do Bitcoin as is. But I think what I just showed you is a pretty good indicator of portfolio. I'm sorry, risk analysis here. Where was it? Uh, can't find it. Okay, portfolio optimization. Yeah, I think this is what I was wanting to show. Um, yeah, so TLT is doing okay with the long directional, um, but we're here to focus on the MGC because that's been proven to work really well. So let me just pull that up, get rid of these two, and just show you the performance. So the portfolio optimization, as I said here, we have MGC and gold doing really well, um, along with strategy analysis as well. These are break even, vertical spread, and the payoff. Again, that's part of the course. So here, looks like return on risk at 22%, take profit at $22 on a, what's the initial? So we have an entry point of $2,300. So, 1% return, max loss at 205. So our max profit is at $45 on 2,300. And this would be a typical trade. Let's just see how gold is. So our expected returns only 2.1%, even though our volatility is lower. But as I said, with the futures, it's much higher. Um, Along with that strategy as well, actually 10 times higher than holding just the ETF GLD. Okay. So expected return at 2.1%, just so you know, um, where we have to have that um, volatility to get the return. That's usually how it works. So we have a higher, does it say, doesn't have our volatility in here. But the big one that really is important is the return on that. Anyways, let's see how the portfolio does. So if we had 100,000, uh, 2 point, well, annual return of 18%. Volatility is fairly low for that with a max drawdown of 5.2%. That's pretty good. For full here, I'm not sure what this benchmark is. That might be basically uh, the SPY or S&P 500, which would be pretty good. But what needs to be factored in here, because you're in gold, if things do come off with the markets, this is a pretty good strategy to rely on, I believe. Um, looking at this sort of stuff. Okay, so assuming you're pretty confident with this, what I have now, so I'm starting to use IDEs here. So this right here is the code of this MGT HFT that has been converted from that Streamlit app, which is a Python, added in the various combinations. This particular C++ will connect into the interactive trader workstation, which is the big thing. This is designed to have what I've been talking about for the last week or so, the ultra uh, low latency. This is built for Windows because I'm using the Windows TWS to connect into. Uh, it can be pretty well moved into uh, a Linux with the TWS running on the Linux desktop, like Ubuntu. It's kind of a pain in the ass, to be honest, and the Windows is much easier. Um, if you're going to do the low latency, uh, really what you're going to be wanting to do, and if you have the volume and the profit to absorb the cost of it, you can do Interactive Brokers Fix. Might be a good way to learn Fix if you have a pretty big account. So that's an option as well. But if I'm not mistaken, Fix on IB is 600 a month. If anybody knows that's wrong, what the real amount is, let me know in the comments. Also, another option is the gateway, which is kind of easier. Well, not easier, but it's another option you can do with interactive brokers as well. And you can do that in a Linux environment. I haven't really explored that. I've seen the code, I've generated, but I've never gone that path because it's a real pain in the ass. So I go the easiest route for now, but we're still using the ultra low latency, high frequency trading mindset here. So right here is what we're doing on the actual strategy. Streams market data for MGC, and that's coming in actually from interactive brokers. As far as I know, because you're only trading with the one instrument, you probably can get away with this without needing a subscription fee for interactive brokers. So that's an option. Plus the using the applied volatility as a proxy. We're also implementing a short put vertical spread strategy and delta neutral hedging on this. And again, applying the HFT style to it, placing market orders for legs and hedging futures. This is the key right here. When you're a traditional trader, you're just buy and hold, and that's all you do. You just buy and hold, do nothing, go to the beach and pray, and if everything's all good, you just do whatever on a basically screwing the pooch kind of thing. So if that's all good, that's fine. But if you want to boost your profit immensely, you want to do these legs, okay? And at the same time, you can hedge with futures if the market gets bad, which I mean the probability is looking pretty strong in that area where if you want to make really optimized trading in gold, especially micro gold, uh, this is the path to go. And to really amplify your profit at low risk, this combination is really good. um, so it's latency focused event loop with non-blocking sockets. Okay. Um, and there's no external uh, dependencies, which is another big thing that I've always put out there as well. That there's no WinSock or Windows, like sockets aren't really good. I played with Zero MQ. I don't think it's that robust. So this is all done internally. So again, we have this configuration set up for TWS API. I have the settings, the usual as described. Um, this was only tested on the TWS and paper trading mode. So it does work. You can see here, this I did put like a heartbeat in it where it pings and prints out a message every 2 seconds to show it's still alive, because otherwise you won't know. You don't know if it's trading. You don't know what it's doing. So there's different modification here. Here's all the includes. You can see here there's virtually uh, no third-party dependencies here. Um, and it's pretty good. And it's all STL stuff, standard template library. So this is something I might demo down the line, but not obviously show the source code. But if you are a high frequency trader, or like to and really do trade money, this might be something you might want to look at. Again, this is going to be available for my quant um, members, my quant elite members. And I'll put this under HFT. Here, I'll show you this in the console here. So yeah, I'll be MGC underscore HFT on my C++ or CPP section under the quant lead programming. You can search for that, HMGC underscore HFT, and you'll find that there. This is quite an interesting uh, uh, project, I guess you could call it, bot system, whatever you want to call it. Um, but I'm just getting to the point where it's to be modified and runnable. Okay, so it runs, and that's it. In terms of modification, that's why the source code's there, and hopefully somebody will want to kind of modify and change it around and tweak it, whatnot. So it's available, and I'm now going to start focusing on crypto, Ethereum specifically, and I'll explain why not Bitcoin, but Ethereum, yes. And we'll talk to you later. Have a good day.